Advanced Guidance for Senior Citizens. This workshop is sponsored by who? Well, first, let me do a brief explanation about accessibility in regards to Zoom and setting it up. If you're looking through it's better to watch it through a laptop than an iPad and an iPhone. You could actually, see it better, and there's captioning on the bottom. If you need to have audio, you can turn the audio on. We do have interpreters that will be voicing. Any technical questions that you guys may have, feel free to type those in the chat. We have tech support here to support you. Now with Zoom, you actually have where you can zoom in and zoom out. You should see a double dotted line in the middle, and you can make myself bigger or the PowerPoint bigger. You actually drag that middle bar. Now, if you have any questions, like I said, you can type those at the question and answer box. If you have any technical questions, you can type those in the chat, and it'll actually, if we have a poll, that poll will come up for you in the question and answer box as well. All right, it's sponsored by CSD Learns, and it's partnered up with Wells Fargo Foundation. Those are our sponsors, and they've partnered up to provide us with this. So thank you for hosting this event to our sponsors. So my name is Stephanie Summers. Let me introduce myself. I'm a financial advisor. I live here in Frederick, Maryland. And I have a firm with 3 other advisors. And we're with Kramer Wealth Health Partners. Today is the 3rd workshop of the month of April. The first, we already discussed about fraud and scams. That was the first one. The second one was all about Social Security. That was last week. This week, we'll actually be talking about Medicare. Next week, the 4th and final will be about retirement income. So those are the 4 in this series for this month. Now, if you've missed the first week or the second week, CSD will actually be showing these recordings later on at a later date on their website. So these will be posted. Now, Medicare, things that we'll cover today about Medicare. First is, what is Medicare? The second is, who uses Medicare? The third is understanding the costs that are involved. And the fourth is wild card costs. Thinking, okay, well, I don't know how much anything costs as far as that. The last is the COVID-19 and what are the impacts on Medicare since the whole pandemic started last year. So Medicare, seen a lot of you, you may know about Medicare, or you're starting to learn more about Medicare. So Medicare, is it easy to comprehend? Not always. Kind of like looking at a forest, and everything, is just hard to understand. It's not easy to navigate through it. Hopefully by the end of the presentation, you'll have some clarity and be able to understand everything there is to do with Medicare. So this is the road, the path to clarity. That's the purpose of this workshop. If you have or you haven't had Medicare, hopefully with this, there's a little bit more to understand and comprehend about Medicare. You'll be able to achieve that. Now, Medicare, what is the program? It's a federal health insurance program, and it's covered by people who are covered under the program are 65 and older, 65 and under with certain disabilities. It also covers individuals who have permanent kidney disease, or also people that have ALS, like Lou Gehrig's disease, for example. Now, also keep in mind that Medicare covers basic health needs. We'll expand a little bit more on that later on. Now, Medicare, what their role is and the future changes that we may have. If you're eligible to get Medicare, you have to be 65 or older in the next 18 years. So from 2011, and then every year, there is 10,000 people each day that will become eligible for Medicare. The result in that is, ballooning healthcare costs. They'll be pretty astronomical. And, we're trying to think about, how we'll handle that. So people who actually receive Medicare, these are the individuals. So there's over 62 million people who are 65 or older and adults with disabilities that are receiving Medicare. A few facts: 1 in 5 Americans are covered by Medicare. That's a lot of people that do use Medicare coverage. Statistics show that in 2016, 50% of the individuals who have Medicare have an annual income of less than $26,200. So, how people, figure their healthcare costs, it's important to kind of keep that in the back of them, keep that in your mind, as far as healthcare, because that's critical to your income. Now, who uses Medicare? Those people, and and what services do they use Medicare for? So here's kind of a breakdown of that information. Medicare has a Part A and Part B. Those two services are used most by individuals. 30% use the Part A and Part B services. So inpatient hospital stays, say 2-3 days, that's about 21% of people that use it for that. Part D services, we'll learn what Part D services is soon, but it's used by 14% of individuals. So say that they go to the doctor's office for just physician visits, that's 10%. Outpatient, which is kind of like same day, it's 7%. There's not just only these 5 categories here. There's more than that is for uses of Medicare, but however, these are the top 5. Part A, B, and D, we will also be explaining what those are today. Medicare typically uses, different categories. So I will explain a lot of information about A, B, and D. There is a C. There's a lot of different letters that goes along with Medicare. They have different purposes for those different categories as well. And we'll explain a little bit more about some of the others later on in the presentation. Now, how many people use Medicare? We're in 2021 now, and we have 61 million people that use it. The forecast in 2030, it's going to probably increase to about 80 million. That's a lot of individuals using Medicare. So how, does the government cover our healthcare costs? Or how do we ourselves cover our medical care? And, what does that look like for us? Now let's focus on what we can do to manage those healthcare costs. You have your known Medicare health cost and Medicare and related costs, and what those are. The second thing is the wild card healthcare cost, long-term care, which is LTC. We're going to use that acronym, but there's other things that Medicare does not cover. So how can you plan for those unexpected expenses? Now, these are the 3 major categories. Part A focuses on hospital insurance, charges in regards to hospital charges. Part B is medical, going to the doctor's office, being examined. That is Part B coverage. Now, Part D, that is prescription drugs. Say the doctor or the hospital or someone prescribes you medication and you go to the pharmacy or you go get the medication. So back to the hospital insurance. Anything in regards to do with the hospital as far as the nurse, the hospital bed, any cost in regards to the hospital would be covered under Medicare Part A. Now, medications given at the hospital and so forth would be under Part B. Say they give you a prescription and that's something you have to take long term, then that would be Part D. Now, what the costs are involved with these different categories, we'll explain that next. So this is my first poll question to ask all of you here. So Medicare covers what? Does it cover basic but comprehensive, covering most of the retirees' healthcare needs? Is it easy to understand, requiring little research or planning? Is it set at age 65? Or is it basic and limited health insurance with deductibles, co-insurance, and copays? So the poll will pop up and you'll answer which you think Medicare covers. Okay, now I'm curious to see what the results are from the poll. Okay, there's a variety of answers that we've received. So the main answer, the true answer, hold on, can you give us the poll back, please, or remove the poll? Okay, so the basic and limited health insurance with deductibles, co-insurance, and copays. That is Medicare. Now, keep in mind that Medicare is basic coverage. It doesn't cover everything. So last week, I had mentioned about Social Security. Now, Social Security covers is coverage for all retirees. Medicare is not, so we'll be explaining why. So it's basic needs, or basic and limited health insurance is the answer. Okay, next slide. Now, let me expand a little bit on Part A coverage. Part A covers what? Inpatient hospital stays or care, skilled nursing facility care, hospice care is another thing that it covers, and some home health care. So some of the home health care, if say it's ordered by a physician and you get a nurse that comes to your home, or you need some type of medical devices, part of your hospital stay would be covered, or part of this coverage would go towards that.
Now let's talk about how Part A works. So those that are older than 65, they're already receiving retirement benefits, not Social Security. So those that have already received Social Security or the railroad benefits, either or, they automatically will receive Part A Medicare. And those individuals that have been working and are eligible to receive retirement benefits will also get Part A benefits. The third category are those who are government employees. You're basically under the government payment or pension system of FERS, and you're eligible for Part A as well. Those individuals younger than 65, how you can be eligible for Medicare is if you've had the benefit for over 2 years or 2 years. If you've claimed disability benefits, for example, for the last 2 years. The first 24 months of those benefits, then you can receive Medicare. If you have a severe end or last stage retinal disease or kidney disease, that as well will allow you to be eligible. So those are what causes a person to be eligible for Part A benefits. Now, if you do not fit any of these criteria, you may wonder if you're still eligible. And yes, you are. Let me explain on the next slide. As I had just mentioned, the criteria, if you are not part of that criteria list, if you don't receive Social Security benefits, for example, or you will receive Social Security, will not receive Social Security, but you still want Part A, you can actually pay for that out of pocket. And that'll be up to $470 a month. That amount changes annually, though. This is based on the 2021 amount that was set for this year. 471 was the max that somebody would pay. If you receive partial Social Security, because some people worked for the government, and that was before the old pension system that they had, CRS, that system. Oh, sorry, not the next slide yet. That old system, if you are old enough to have been a part of that, you're not eligible for receiving Social Security benefits. If you would like to be a part of Medicare, then you can then pay out of pocket for Part A. Suppose you did work for a private sector company for several years and you have Social Security credits that have been earned through that work history. You must meet 40 credits in totality to receive benefits. If you haven't reached the 40 credits for Social Security, maybe you're in some type of range. Maybe you've earned 25 benefit credits. I'm sorry, I said that incorrectly. 25 credits. And you have earned 25, then that 471 will go down. It'll be prorated based on how many credits you have earned through your work history. So calculating that the best way to do that would be Medicare calculating it for you. You can contact them and find out what that cost would be for you per month. And basically it'd be based on what your needs are. Healthcare insurance will cover based on your needs. So you would refer and talk to somebody at Medicare to determine that. So next we'll talk about if you were to be hospitalized as an inpatient, what would that look like deductible wise, copay, what would you be responsible for? I'll explain that. So first, that first day that you're in a hospital, it's within a 90-day period, benefit period. So within that first 60 days, you pay a deductible, which is $1,484. Then after that 60 days, that last 30 days within that 90-day benefit period, you pay a copay, $371 per day, depending on how much longer you spend in the hospital. So that will help you calculate what the cost is to stay in the hospital. After that, Medicare covers 100% if it's longer than that 90 days. So 90 days, once that's completed and you are still hospitalized, then they add a 60-day, which increases your copay to that $740 a day. And then after that, Medicare will cover the rest. So in total, you can understand in a 150-day view what that cost would be. If it's past 150-day, Part A no longer pays, which means that you actually have to calculate and figure out how you have to cover that extra cost if you have to stay in the hospital longer than 150 days. It's a different cost. It's not just that premium cost, but it's also the deductible and copay that are calculated. So those that are not eligible for free Part A benefits is one category, and those that are not eligible for Part A, there's no premium if you are able to get Part A, but then you have to pay the deductible. So there's difference in the category of which one you fit into for Part A benefits. Once you're hospitalized, and that is done, you are released. You get released from the hospital, you go to a skilled nursing facility in this example. So let me clarify how that works and what the cost is there. You have up to 100 days for that benefit period. The first 20 days, the patient doesn't pay anything. It's free of cost for the first 20 days. Medicare will pay for it. After day 20, so 21st day to the 100th day, you then pay $185.50 per day. That's based on the number of days that you're there at that skilled nursing facilities. So $185.50 per day. And then afterwards, after you've hit that maximum of additional 80 days, then Medicare covers the cost. So talking about Part B coverage, let me explain what that covers. Part B is a voluntary coverage, first of all, and it covers the doctor office visits, outpatient care, where you may go for some type of simple procedure or surgery and be released the same day. The third is the home health services and also preventative care. The last one is that durable metal equipment. And so basically what that covers is if maybe in an example, your doctor orders you to get a walker or a wheelchair, and you need to be able to use that at home with a nurse, for example, or that's the durable medical equipment that would be covered with Part B. Let me tell you what the premium looks like for Part B, and then you can basically calculate the amount that you would pay per month based on your income for the Part B premium cost. So what's common is basically pay $148.50. Most people are within that category. $148.50 are for those individuals with income that's $88,000 or less. Or if you're married, the total income would look like $176,000 or less to pay the $148.50. And that's based on the adjusted gross income. So the modified adjusted gross income, MAGI, and that basically is how they calculate your cost of paying the premium. So then you'll see the more you earn, the higher the premium cost is for Part B. $148.50 is the starting point for the premium cost, then it goes up to $207.90, you'll see here, and then $297 per month, $386.10 per month for those that earn more then you have a higher fee for the premium. So let me explain how they get that information. They understand how much you pay. That's through the MAGI, that modified gross income, and through the tax returns through the previous years to figure out what your coverage cost would look like. Next slide. So you pay per month for Part B benefits. Those individuals already receiving Social Security get Medicare, and that comes out of your Social Security check. You may want to add the deductible or the copay. Medicare then will cover the first 80% of the medical cost. So for example, you get a claim or a bill from the doctor's office with various different services that I'd mentioned. If it applies to Medicare, they will pay 80%. The remaining 20% you pay out of pocket. The annual deductible, that $203 annual deductible, that number will change every year. 20% is basically the difference that you pay because Medicare pays the 80%. Plus any other charges that Medicare does not cover, then you would be responsible for. So we're ready for a second poll. Another question for all of you. For MAGI, that modified annual gross income, I want to ask you if you know how they calculate that. Is that based on the tax return 2 years ago? Or did they calculate it based on the total adjusted annual income or your tax exemption interest? Or increased by the taxable Roth conversion and municipal bond income? Or is it the fourth answer, which is the decrease by tax-free charitable IRA rollovers? The fifth option here is possibly reduced by tax-deferred investing. Or the last option is all of these are included in the calculation that of the MAGI. So wanting to know what you all think is the answer to that question. Okay, are you wondering what the answer is? Let's show that. All right, most of you, I see a lot of the answers here. Most of you answered all of the above as the answer to this question, and that is correct. It is all of the above. If you don't mind removing the poll, please. So all of the above. And the reason why that is the answer is because the MIGA, the modified adjusted gross income, Medicare actually looks back at the income or tax income that you made 2 years ago, and it's based on what income that you've brought into your household, based on retirement sources, for example. They calculate and figure out the number on your return as the MAGI, and then let Medicare know what you had earned and what you would need to pay. Basically, it could be the same amount, the 148.50, or maybe your income increased, and therefore you then pay the $200 and change. So it could fluctuate, and it does impact Medicare and the change of the amount that they require as well. It also impacts the cost of Medicare. And, speak with your financial advisor about how you can adjust that income or adjusted income to be able to help you understand better on how that works and how that's calculated and how you can modify that for yourselves.
Now, your Part A and your B enrollment, how does this process work? There's two different ways. There's an automatic enrollment or there's an elective enrollment. So those are the two different ways. The automatic enrollment, how this works is you have already paid to Social Security benefits. You've already paid into Social Security benefits, so they automatically know that you're eligible for Medicare. Now, the elective enrollment means you haven't paid into Social Security benefits or you don't pay Medicare from your payroll deductions, or you didn't pay, Medicare from your payroll deduction. You didn't pay into those benefits. So you would need to, if you want to get Medicare, then you would have to reach out to Medicare, sit down, and see about enrolling. Now, there are 3 different enrollment periods, and how this works is the first is the initial enrollment period. So you're getting close to age 65, for example. You'll be given a time frame of 7 months. There's 3 months before your birthday. There's 3 months after your birthday. So it's a total of 7 months to, assess the situation, figure out what benefit you do want to have for coverage. So that initial enrollment period is 7 months. The second option is, or the second enrollment period is special enrollment period. So suppose that someone has been working and they're over the age of 65, they can, go ahead and get with Medicare and start receiving Part B. And also at the same time, you have to notify your job, your place of employment, Human Resources Department, say I'm 65 now, I'm eligible for Medicare. How would this work if I have Medicare benefits and I also have benefits with my job? So, discuss with your Human Resources Department and they'll let you know how all that works out. The third way is general enrollment. The third one is general enrollment period. So you miss the initial enrollment period and you realize, oh gosh, I need extra health insurance. You can go ahead and enroll, but let me give you a heads up. Keep in mind that if you miss the initial enrollment period and then you go ahead and apply for the general enrollment period, there's a pretty late penalty for that. 10% actually, a 10% increase on your cost. It's $48.50 plus another 10% every month. So, you incur more cost. So if you're eligible, you will actually receive the information about Medicare, pay close attention to it and make sure that you get in that 7-month time period, that window at age 65. Now, if you're younger than age 65, that means you have to wait 2 years before you'll receive Medicare. And, some people, they have health insurance, from their employer. But then they also get the additional Medicare coverage. There are some people that have coverages with both. Now, which one would be your primary depends. There's a lot of factors that go into that. Medicare can be your primary, and then some will have your place of employment with your health insurance by, your provider primary, or it could be vice versa. It really depends on where you retired from, who is assigned to, the primary as far as the insurance coverage is concerned. And again, enrollment periods are pretty relevant, so pay close attention to those. Now we've reviewed Part A and Part B. Now I want to cover some details on Medicare Part D with you all. This focuses on prescription drugs, the cost of prescription drugs. It will coincide with Medicare and private insurance. Now you have to have Medicare Part B. You must have A and B or just B in order to be eligible for D. So each plan that you have selected have different various costs as far as what drugs they cover. And so be sure that, say you've been on a specific medicine for quite some time. You want to make sure that your Part D program, when you sign up for it, that actually covers your medication that you've always been taking. If it doesn't cover, then you need to look for, to communicate that with Medicare, with the representative, and they'll help you to figure out the best coverage and what would be the best fit for your needs. Now, you might be puzzled as to why I mentioned A, B, and D. So where's C? There's a letter missing, right? They have C, but I don't want to go into depth about explaining about Part C. Part C is a Medigap Advantage program. So that is if it's someone who leaves their job, for example, and they're not keeping their job or their place of employment insurance, and they need more insurance coverage for health reasons. then they, that is something that they would actually select. So your choice of medical insurance, I mean, the list is pretty lengthy. You can get Aetna, you can get United Healthcare. There's actually different providers, which is UHC, United Healthcare, Humana. There's Blue Cross, Blue Shield. There are a lot of different options. You do have choices. It depends on what area you live in. Some insurances are nationwide. Some insurance are more, regional. It actually depends on where you live and what's provided in your area. So that's kind of a brief explanation on Part C. Now, so the third poll question I wanted to ask you all, to be eligible for Part D, an individual must what? Be enrolled in only Part A, be only enrolled in Part B, not enrolled in either Part A or Part B, or be enrolled in Part A and or Part B. So which answer is correct? You will go ahead and pull up the poll and answer this question for us. Okay, let's see if we can get the results for this poll question. Okay, yeah, most of you did answer the fourth option, which is the correct option. So let's remove the poll, please. Yeah, you must be enrolled in Part A and or Part B. You cannot have Part D without A and B or B itself. So now, sometimes there's individuals that say, oh, I don't need Part D because they may actually have a health insurance, and their health insurance, other than Medicare, covers prescription drugs. So that's why, I mean, there's a variety of situations. It's not required for you to have Part D. Now let's talk about the wild card cost. So, long term, we may have a long life in retirement. We need to enjoy our retirement. And say that, you're getting close to, or the older that you get, of course, there will be healthcare costs that comes up. Medicare does not cover any of your long-term care needs. If you remember previously, I mentioned if you're in the hospital, you need a skilled nurse facility, Medicare, will pay for those during that time frame. But however, if you need some after that time period, what do you do at that point? That's where long-term care comes in to the situation, and how do you pay for it? You need to have maybe finances ready for that, or you need to purchase long-term care insurance in addition to the insurance coverage that you already have. So in case you need more serious care. So what does long-term care, cover? So long-term care would actually cover any types of your daily activities that you are not able to perform. For example, if you're not able to dress yourself, if you can't, transfer or move from getting out of the bed, or, being able to go to the restroom, say that your cognitive has declined, you're not able to maybe feed yourself, you're not able to bathe yourself. There's 6 of them. How many have I mentioned? Oh, what did I mention? Oh gosh. Okay, I lost my train of thought as far as what the last one is. But those are kind of those basic, activities that you are not able to do for yourself every day, that long-term care would be able to come in and help to, take over and for your health insurance needs. Now the cost is pretty significant. The average is about $100,000 a year for this type of care. That $100,000 a year applies to home care. Say you have a nurse that comes in daily into your home, or you've been placed into a nursing home. $100,000. I mean, that's expensive. That's a huge expense every year. Now, statistics show that about 70% of those who are over 65 will need the long-term care. The average use is typically 2 to 3 years of long-term care, depending, some people use it very long-term. Let me give you maybe a real life example. So my grandmother, she's 97 years old, and she's been using long-term care, and she has been for quite a while. It's a lot longer than 3 years. So her case is a little bit unique. She is continuing to pay for her long-term care needs, every year. Now, there's some people that are seriously ill. It's a little bit shorter time frame. So it varies. With the wild card cost, you need to, there's no way to understand or predict what the cost is going to be. But if you don't plan well, this can be detrimental, to your retirement income for the plan that you have, because you have the income and you didn't plan correctly for this. You would end up maybe spending all of your finances on health care, and then you may not have anything left for enjoyment or, extra fun or, your last few years of your life. So, it's pretty important. So be careful with planning, those expenses. Make sure that you are able to have money left to be able to, pass on to your beneficiaries, or maybe, be able to, donate to different charities and so forth. It's just important to have a plan, plan well. And speaking of retirement income, of course, we'll be getting a lot more into retirement income in the fourth workshop next week for sure. Now, in today's world, we're actually dealing with, the pandemic and COVID-19. So Medicare and how, this works, how do we prevent from scams and fraud? What does this all look like for us? The current vaccine for the COVID-19, is free. So Medicare will actually cover that cost. And if you just happen to pay for the vaccine, look and try to find your receipt, or maybe a statement or an invoice or something that you received from your doctor's office, and let them know and say, hey, I need to make sure I get refunded or reimbursed for this, because this is free. You should have no cost when it comes to the vaccine. And if you have any issues, then you actually can report this to the Department of Health and Human Services, UHHS, the HHS. So the phone number is 800-HHS-TIPS, or you can look online at their website too, tips.hhs.gov. Again, it's tips.hhs.gov. That's where you can go to report if you were charged when you received the vaccine. And, make sure that you report them and, get your money back and get a refund. The other thing is there's a lot of scammers that are trying to steal your Medicare information. And if someone asks you for your Medicare ID number, and you're like, well, why do you need that? And of course, they don't tell you why if you question them. So another reason that they may want your Medicare number is that they can get the vaccine themselves. It's a scam, because Medicare will never actually call you to ask you for your information. They'll never, call you over the phone. But that comes up and you have issues with that, you can also contact Medicare, actually by their website or through their website, medicare.gov. Reach out to them and say, hey, I was actually scammed by someone trying to steal my Medicare ID number. So those two things, again, the vaccine, like I said, is free. It's no cost to you. Do not give out your Medicare information to anyone. If someone is trying to ask you for that information, just ignore them, hang up, ignore your emails, your text messages, any way that people can try to find to get your Medicare numbers, they will, and they will take your number. So no, don't do it. Just absolutely don't do it. Okay.
Okay, this is my disclosure statement from the firm that I work with. Phone number is here, the email is here as well. If you did not capture enough information or you would like more information, you can contact Kramer for more in-depth question, information, and so forth after this session. Thank you. Now I do have time here for question and answers, so I will look at the QA section and I will restate the questions in ASL and then I will answer those. So the first question that I see here, let me read it. Oh, okay. So this question, the first one that I see is there's a husband and wife, federal employees, both of them being retired from the federal government. They were told by Medicare, a representative from Medicare, for them to keep their federal health insurance plan, and they would not need to apply for Medicare insurance. And so far, so good. They're able to afford their medical expenses and needs, but wondering if I advise them to get Medicare or not. So my answer to you is it really depends on your situation. There's no one answer fits all individuals and all scenarios, so you really need to dive more into your personal situation. And again, if you do need Medicare or not would be dependent on your circumstances. So I don't know, unfortunately, with this, what is it, FERS or CRS pension, which pension system that you belong to. That would also depend and give you a different answer. So I would advise or recommend that you speak with a financial advisor and to be able to review maybe the HR or Medicare provider, review with them the healthcare needs for your situation. The second question, let me read it. Okay, the second question that I see here is a spouse, the husband had worked in the private sector for a while before working as a federal employee. So how or where do we get the information if he meets the 40 credits eligibility for Medicare? That's a great question. So you actually could go to the Social Security website to pull up basically your Social Security credit history. They will tell you how many credits that you have. Once you do see the credits that you have, you would then know if you're eligible for Medicare, full or partial coverage. Let me give you a scenario that might be helpful. So a person that is under the CRS pension program, the Civil Retirement Services System, that person did work for a private industry as well, and then federal government, and retired. He was trying to calculate how to see if he could qualify for Medicare. He looked at the website to see how many credits he had. If he has 40 credits, then you are able to get Medicare full coverage free, and then to be able to be eligible for Part B as well if necessary. So how you would pay for Part B coverage is basically CRS has a system. If you've never paid for Social Security or Medicare through that system, then Social Security would need to get the information from CRS to calculate how much you would pay for Medicare. It's very complicated, unfortunately. It depends on how many years you did work within the private sector and how many credits you earned to calculate the dollar amount of how many years the CRS pension, what that dollar amount looks like to pay you versus how much Social Security pays on top of the CRS pension. Medicare then is a part of that Social Security, which is calculated to let you know how much you pay. If CRS is less than Social Security, then you pay the difference. It's a very complicated formula. You have to sit with somebody to definitely calculate that out. The next question that I see here is this person's wondering if their husband is, I guess, quote unquote, in trouble about because he has not signed up for Medicare and he's past the age of 65 and he's still working. So what's important is to speak with your HR department or his HR department at his place of employment and ask them what he needs to do about Medicare benefits. If he pays or suspends that until he retires fully from his place of employment, and talk with Medicare as well to make sure everybody's on the same page, to be a team, to work together between the employer and Medicare to find out what he needs or when he applies. Next question, let me read that real quick. Okay, that fourth question that I see here is his wife is a federal employee, retired federal employee. That happened 3 years ago. Started claiming SSDI. After the 2 years of SSDI, she automatically gets the Medicare. That is correct, automatically qualifies for Medicare. And also keeping the health insurance through the government, the Blue Cross Blue Shield benefits, and receives both Medicare and Blue Cross Blue Shield. So he's asking if that means that Medicare would be primary in that situation and Blue Cross Blue Shield is secondary. The second insurance would cover the remaining balance of what Medicare does not cover is also the question. So to answer that, it really depends which one is set as primary, secondary insurance. You would basically give both insurances to the doctor. That office will figure out the first one, whichever it is, what they cover and not cover, and the remaining would hopefully be covered by the secondary. So if both of them have paid and there's still a remaining balance after the two insurances have paid, then you would pay the remaining balance. If it's just a doctor's visit, then definitely both will be covering your total cost. Okay, the next question, the fifth one that I see here is ACA, the Obamacare and Medicare. Are both of them related to each other? So the ACA is the Affordable Care Act, and that act was instituted with Obama back during his time or term as president. Asking if Medicare and ACA are the same or tied together, really ACA is for those individuals that are not being covered by health insurance at all. They could purchase health insurance, a public market of health insurance coverages. And so it really depends on what is being covered. For example, if a person has both, Medicare has a specific list of items that they will cover with their insurance. All the information, what Medicare will cover, is on their website. More in-depth information for example, the health needs that you maybe need at a doctor's office or a hospital, you can go to Medicare.gov for that information to see what your coverage looks like. Okay, and then this question is it worth getting the Medicare supplement from AARP? So the medical supplement, that's what I had mentioned about the Part C and other different insurances that Medicare has that will be supplementary that you could receive. AARP, that's a preference or a personal decision that you would make. If you want to speak with different representatives, maybe AARP, you want to find out what they have to offer and do a comparison between them and others before making a decision. That's definitely a personal decision that you would make. The last one here is the maximum out of pocket. How does that work? And so I'm not quite sure I understand the question. I apologize. Can that person clarify for me? The person who asked that question, maximum out of pocket, how it works, can you expand a little bit or explain a little bit more about what you mean? Okay, I know time is running out, unfortunately, so you can ask that question through CSD Learns, and then they can ask me for me to answer that later on. So thank you so much for all of your questions today. And so we'll go to the next slide to finish up this series or webinar. Next Tuesday at 11, I will be speaking fully about retirement income. And so we'll see you next Tuesday. Thank you so much again for joining today's webinar. CSD Learns and Wells Fargo Foundation sponsored. And thank you for your time in attendance. We'll see you next Tuesday. Bye-bye.